NSE has added 1 crore new investors in a very short span of time. What does it really mean? Kartik joining us in the newsroom. Kartik, what does it mean?
Hi, Shweta. Nice to have you back with us after a hiatus of almost a week or so. So good to have you back. Yes, NSE. So I think, the war footing is not just Shola Mandalam, the war footing is actually even NSE. NSE has been attracting investors pretty much at war footing. So 1 crore new investors added in the last 8 months alone. Now this takes the total number of unique registrations of investors at the NSE at 8 crore. So 8 crore unique individuals, retail investors are actively participating, investing via the NSE platform. Now, what do these 8 crore Indians really represent? These 8 crore unique registrations represent about 5% of the total 17% of the total households of the country, 5 crore total households, which is 17% of the total households. So, I think the signal is fairly clear that as a country of savers, we are now very seamlessly migrating into becoming a country of investors. Now, why is this happening and where is this happening from? I think important to put that in perspective. If you look at the north, south, east, west divide in the country, North India continues to be the largest chunk contributing to these new 1 crore investors, about 43% of new investors coming from North India, followed by West, followed by South, and the East continuing to be a laggard. So, not a great story there when it comes to investments coming from the eastern part of India into stock markets, but North India continuing to dominate. Within this, what is the city-wise cluster, the city that we guys are living in and Suyash talks about every day from a market's perspective? Delhi NCR, the biggest contributor, 7% of new registrations from Delhi NCR, followed by Mumbai, followed by Pune. These are the top 3 cities. But I think the narrative also emerging is that from these new 1 crore investors, about 45%, a little less than half the total investors are not from the top tier metros.
Okay.
So while Delhi contributes, Mumbai contributes, Pune contributes in high percentage figures, almost half of these new investors, about 45 lakh new investors registered on NSE, are not from the top tier cities. They are in fact from tier 2, tier 3 cities. And that is really bolstering this whole move from a country of savers to a country of investors.
Okay. What's surprising there for me is that Delhi NCR, in fact, Suyash, is it's the top, tier 1 city from where most investors are investing, hopefully are also actively investing. 7% in Delhi to about 4.6% in Mumbai. What does that tell you? I mean, people would generally expect Mumbaikars or Maharashtrians in general to invest more because that's the financial
Gujaratis
capital.
For that matter. I mean,
Gujarat for that matter.
Leads stock markets, and here we are seeing a completely reverse trend.
I mean, the only thing that I can pick out is that increased participation. That has been the theme. And 17% of the households are now investing in the markets. Is a huge deal for the markets. And we have seen this boom come, right after the COVID pandemic happened. And a lot of retail participation also picked up. And in the last 2 years, we have seen the markets, the participants have been largely resilient. They have seen a war breaking out, economic turmoil brewing, geopolitical tensions also are there. They have been largely resilient, and they have not, after the COVID crash, we have not seen a big crash in the markets. So retail participation has improved. It seems like the investors are getting more, well versed with the markets because of the, fintech improvement in the ease of transactions,
ease of participating in the markets. But I think at some level, Shweta, it's also a story about investors really seeing robust returns over the last 3 years.
I was about to come to that.
The Nifty 50 has returned about 22.5% to investors. The Nifty 500 has returned about 25% to investors.
So the fact that you're getting better returns,
right? Better returns. I mean, you don't want to leave your money in a fixed deposit, which is just about
7%.
Actually, post-tax, not even beating inflation. So you see an instrument or you see an avenue open where you can be returned much more handsomely than what traditional banking instruments do. And I think that education, that realization is finally setting in. And we are seeing this tectonic shift that money is not going to be lying in banks. In fact, the other day there were also stories, and we also discussed, Shweta, that there were stories about the household savings declining. Now, juxtapose this data coming with household savings declining. Why not? Household savings declining and investments increasing. So I think it's a very happy situation.
You know, at this point, the only anomaly that perhaps comes to my mind, and if whether it's an anomaly at all or not, taxpayers in India, about 7 crores, investors about 8 crores. I mean, what is the variation here? How do we count for this? So there are 1 crore people who are not paying taxes but are investing.
They have done their KYC, they have their PAN registered, they have their Aadhaar registered, they have and they are representing unique households of about 5 CR. So I think what it is also telling me is, reading between the lines, that
how do you read this?
We are perhaps looking at more number of dependents also participating.
Absolutely.
We are looking at perhaps housewives also taking money out of out of their almirahs, or selling the family heirloom and using that to make investments, which is going to give returns perhaps higher than gold. Gold is no longer, the safe haven for investments, which acts as a hedge against any sort of fluctuations. That was the case 30 years ago, not anymore. So I think what I can place this or attribute this to is that it is not just the earning member alone which is contributing, but it's also the non-earning members, leading to 8 CR, but 5 CR households where at least one taxpayer justifies these numbers.
Absolutely. So you have the housewives, or the house husbands rather, people who are not earning so much and who are dependent on the earning.
Dependents, 18 plus children between 18 to 22, yes. First jobbers, etc. In an informal capacity, also investing.
Absolutely, and getting robust returns there. Markets beating a lot of returns, a lot of other financial assets at this point in time. So more and more unique investors